Did you know that over 100 billion clothes are produced every year? To put this into perspective, the Earth's population is around 8 billion. This means that every single human being on the planet should be buying more than 12 new items of clothing every year. But there are big variations. For example, the average American consumer buys roughly 68 new items, whereas a European one buys roughly 42. Or did you know that the clothing industry employs more than 300 million people? That's actually nearly as much as the population in the US. And this also means that the clothing industry alone employs almost 4% of the population on the planet. Hi there. Before we dive into our main topic and talk about the clothing company, surprise, surprise, if you don't know me before, my name is Arimatti Alhanko and I'm the founder of StockBrain 24/7. Previously, I worked as a portfolio manager and as an analyst in Switzerland, Luxembourg, Sweden and Finland. If you have any interest in investing stocks or money, I believe this channel will be super interesting for you. Or if you just want to listen to a guy like me who thinks stocks while being in the shower on average 4 to 5 minutes a day, or while taking his more than 10,000 steps a day, or even while playing with his 3 kids. What should you expect from this channel? The idea is to go through some of the most interesting investment cases out there. And we will actually start with one today. In addition, we will study some of the greatest companies and the playbook behind them, or why some stocks collapsed and maybe recovered later on, like Netflix or Carvana. The aim is that everyone, including you and me, would become a more informed and better investor. And as you probably can hear already by now, everything will be presented with my beautiful Finnish accent. Also, feel free to check my website at www.stockbrain247.com. There, you can find high-quality Excel models, well, even though it's me who is saying it, on the companies discussed in these videos. These can be super helpful for any institutional or private investor, or even for a student who is trying to break into the industry. But let's jump into our main topic. Over the past 6 years, this clothing company managed to increase its revenue and earnings by more than 10x. It revolutionized the so boring outdoor industry with its bright colors, and it has almost 2 million social media followers out there. It started its journey by selling only one pant purely online in Sweden, and today it has a broad offering of pants, jackets, shoes, you name it, and it's doing sales in 40 countries. And what is so cool is that the company's previous CEO, Pernilla Nyrensten, she became the first female founding CEO on the Stockholm Stock Exchange since its inception 160 years ago. And it's also so cool that the journey started just over 10 years ago. By the way, just to remind everyone, this video is not investment advice, and all content is intended for educational and informational purposes only. I may hold assets in the companies discussed in this video. All content is based on the company data and my discussions with the management team back in 2022 and again late last year. Alright, so the company being discussed today, if you don't already know by now, is a Swedish company called RevolutionRace, and I have divided the investment pitch into 4 different sections. First, let's start with the company's history, how it actually makes money, and what is the secret sauce for the company having a much higher margin than its competitors. Second, let's look at RevolutionRace's underlying markets. The US market, it has not been an easy market to conquer, but the company should have enough growth opportunities in the DACH region and in other parts of Europe. Third, let's look at RevolutionRace's financial development recently, and why the company must show that the previous quarter was just an outlier when it comes to both sales and margin development. And finally, we will touch on the valuation part. By the way, all the graphs in the presentation can be found on the magnificent Excel file that can be found on my website. Let's start with the company's history. It's actually a cool story and you should hear it. As you can see on the beautiful 8-step road here, the company was founded in 2013. Well, in the graph it says 2013, 2014, but it's only because the company's fiscal year ends in June instead of December. But let's not focus on this. Anyway, the founders of RevolutionRace, the couple Pernilla and Niklas Nurensten, before founding the company, they had been selling outdoor apparel for many years at different trade fairs in different parts of Sweden. On one occasion, Pernilla was doing her normal work somewhere in Sweden. Then there was a 25-year-old lady who was approaching her. Pernilla sold a shirt for her, and after selling the shirt, she said, "Oh, wait a minute, before you go, I have one question. What do you think about the pants that you're wearing?" Well, maybe it's a bit weird question, but anyway, the lady was kind of, these are great quality, but they don't really fit well. The color is so boring, and they are so expensive that I don't want to go to forest with them. What if I get a stain of blueberries and it doesn't go away? I just go to forest and put my jeans on. If you didn't know, by the way, many Nordic people actually go to forest to pick blueberries. I think I read somewhere that the stunning amount of 150 to 200 million kilos of blueberries are picked on a yearly basis in Finland. That's roughly 30 kilos per person, or 65 pounds, or the same weight as 87,500 Tesla Model Ys. An interesting stat, right? Either way, this is when Pernilla and Niklas got an idea of starting our own company. So they were wondering, why the heck do the clients need to pay so high prices? Could we do the same quality, but cut the price by half? And second, why do all the outdoor clothes need to have so boring colors? Grey, army green, black, you name it. So now they had the idea. The next step was about getting some investors on board. They had around 300,000 Swedish crowns in the pocket, which back then was around 35,000 euros or 45,000 US dollars. Not that much if you think about launching a business like this. They went to pitch the idea to 20 to 25 investors in Borås, where they were living. Probably you don't know, but Borås is a Swedish city that is well known for its textile industry. I guess one could even call the city as Sweden's leading textile center. Let's see if I get any feedback from Sweden saying that's not the case. But anyway, they went to approach this great idea of happy outdoor, high quality, selling only online, cutting the middleman. It all makes sense, right? But unfortunately, none of the investors got interested. They were saying like, please Pernilla, why would anyone need to have bright colors in the forest? Remember, this is a conservative industry. Nobody will buy your stuff. So after that feedback, you can imagine, Pernilla and Niklas, they got a little bit depressed. They had the idea, but there was absolutely no interest from investors. They had some money, but not that much. The couple were living in a semi-detached house in Borås, and they had actually plans to use that money to renovate their kitchen. But they were like, this is it, this is the company. We will not give up, and we will use all our money on this project. And we will show the other guys that they are wrong. And they were actually super smart from a business perspective as well. They started with only one pant. Manufacturing one model wouldn't cost much. And amazingly, they were presenting the pants in social media by using themselves as models. Like I'm today. You can do marketing efforts cheaper than that. By the way, I don't get any fees from the company while I'm having this shirt. Well, maybe the situation will change and somebody will knock at my door soon. And they asked directly what colors the customers would like to have. Some friends giving feedback in the beginning and then later more and more people. And the rest is history. I guess the main lesson is that you should never ever give up. As you can see again on the same 8-step road graph, the company expanded a year later into other product categories. First it was pants, then more pants, more colors, then jackets and other stuff. Furthermore, the company expanded into other Nordic and European countries a bit later and launched on Amazon in 2019-2020. This was only to be able to reach the Amazon Prime customers. The company IPO'd a year later. If I remember correctly, the market value was at around 8.5 billion Swedish. And remember, 7 years earlier, nobody believed in the idea. Over the past years, RevolutionRace has continued its expansion and launched new products, like the collection targeting teens and dogs, and lately the Alpine collection as well. By the way, if you like the content so far, it would be super cool if you could subscribe for the channel and even hit the like button below the video. I have heard that the algorithms will like it and we can make the channel even bigger and better. Thank you. So the couple wanted to offer high quality products at affordable prices. This is where the DTC, direct to consumer model, came into play. The company is selling everything online by themselves, by avoiding the use of a number of intermediaries who normally occur within retail trade, and who generally have no bearing impact on the quality of the products, such as wholesalers, distributors and retailers. RevolutionRace is able to avoid external costs related to such parties. Not only does the company is able to offer cheaper prices for its customers, and thus get a bigger share of profits for themselves, but it is also able to shorten the lead times for launching new products. It gets direct contact with customers, create a loyalty with customers, and full control of the brand. And in terms of financials, you can see the direct DTC impact here. We have the gross margin, that is the revenue minus the production and distributor and wholesaler costs, for RevolutionRace and for 4 other companies that operate in the same industry. As you can see in the graph, RevolutionRace makes above 70% gross margin. You have some pure online players like Boost and Zalando that have it somewhere around 40%, those guys that are selling only other companies' products. Amer is at over 50% and increasing as it is becoming more and more as a DTC player, similar to RevolutionRace. Phoenix Outdoor is hovering at around 58%. DTC, it's a lucrative business model. You can see higher margins. But why don't other companies transform into direct-to-consumer model as well? I think the answer is actually quite simple. It's super hard to change your business model once your business has been established. You have wholesalers, distributors as your partners. Would they ever take you back if you anger them? Nike, I guess everybody knows the company, tried to do a rapid shift to DTC, but they weren't that successful. However, if you started purely digitally, it's so much easier, right? I think it has also something to do with the company culture. If you have read the book about Starbucks, it's actually a great book, a big recommendation. Howard Schultz put it out well. I actually have the book here, and on page 80 he writes, "It's difficult, if not impossible, to reinvent a company's culture. If you have made the mistake of doing business one way for 5 years, you can't suddenly impose a layer of different values upon it. By then, the water is already in the well, and you just have to drink it." Okay, that's about the company's history and the business model. But what about the underlying markets? The company started only in Sweden. But in how many markets they are present today? The answer is 40 countries. And in 38 out of these, the company is still small. In 2018, the company's fiscal year ending in June 2018, as you can see in the graph, the Nordic region represented 65% of sales, with the remainder split between the DACH region at 31% and the rest of the world at 3%. Only 3%. In the graph, Nordics is marked in brown color, DACH in red and the rest of the world in black. Fast forward, today the DACH is more than half, and the rest is split pretty evenly between the Nordic and the rest of the world. Within the outdoor market, RevolutionRace has the highest market share in Finland and in Sweden, of around and north of 5%. These are the 2 markets out of 40 where the company has significant presence relative to the market size. In Germany, it's still below 2%. And that's why the company is putting heavy focus on the German market, as it still sees a big upside there. And Germany is the largest European outdoor market. If you look at the market data back in 2020, the global outdoor apparel market, it was worth of around 85 billion euros, and if we exclude the US, it was around 60 billion. And if you look at the RevolutionRace revenue, that's around 200 million euros per year. Thus, the market size shouldn't be a limiting factor. You might be scratching your head a little bit and wondering if the company has any presence in the US. It's anyway a 25 billion market. And as I mentioned earlier, the company has had some issues in the US. When they launched there, the shipping fees were skyrocketing. The company was transporting all the goods from Europe to US, and post-COVID, the shipping fees were just going crazy. Also, there were some 25% customs to be paid from the Asian countries they manufacture. Today, The company is slowly building up some inventory locally in the US, in Boston. But sure, they still need to think about the production footprint, especially Trump in power again. Based on my discussions with the management team, I don't see much happening here in the US over the coming quarters. The big focus will still be the European market. In the next graph, we can see again the same three regions, Nordic, DACH and the rest of the world, but now with the year-on-year sales growth rates. Same colors again. In the latest quarter, Q1 2025, which equals July-September 2024, we can observe a significant decrease in growth rates. The Nordic market was actually declining, DACH growing only by 4%, and the rest of the world growing by less than 10%. If the growth rates won't pick up over the coming quarters, I'm quite certain that the share price will only have one direction, and it's down. I talked with management team about this roughly 2 months ago. Based on the discussions, the market was extremely challenging in the previous quarter. Some markets were declining by 10%, some by 15%. So on a relative basis, the company was still doing okay. Warmer weather and delayed rainy days, they didn't really help the situation either, considering the company's products. But still, we need to see a clear acceleration in the growth rates sooner rather than later, especially in the DACH region and also in the rest of the world segment. Actually, the CEO, CFO and the chairman, they bought some shares early November. Let's see if there was any reason behind this. At least Zalando recently, they reported quite nice fourth quarter. The other thing that needs to pick up is the margin. So the growth rate needs to pick up, but the margin as well. During the COVID-19 period, RevolutionRace made a massive margin, the peak quarterly margins reaching 30%. You can see it in the graph on the right. But back then, inventories were at a low level. There was no need for any discounting really. You can imagine when there is no need for discounting, the margins are obviously higher. Unless we get another pandemic, well, hopefully not. I don't think the company can reach those levels again. Having said that, similar to growth rates, the previous quarter EBIT margin at 16%, it can't be a new normal either. I think we will get a good feeling of this tomorrow when the company is about to report. Some high margin products, according to the management team, were not selling well in the previous quarter. Some high margin product sales were down by 30%. It's an interesting investment story for sure. The company has had a great run, except the latest. That's why if you look at the recent share price development, well, the share has not really been performing. But going forward, the key question is, will the share be a falling knife or is it ready to fly? Well, I would say it's quite simple story, really. Well, investing nothing is that straightforward, but what I mean is that if the company can't accelerate its growth from the previous quarter, and it grows its sales organically only by mid-single digits, that is by around 5% a year, I think the current valuation of 15 times last 12-month PE or 11.5 times trailing EV/EBIT is not that cheap, especially if the margin doesn't recover. Probably somewhere around 8 times EV/EBIT would be a more reasonable valuation in a scenario of lower margins. In other words, the share would trade below 30 SEK per share over the coming quarters. On the other hand, if, remember it's a big if, the company is able to get the growth back to double digits, let's say growing again between 10 to 15% a year, and the margin will recover. Together with share buybacks and dividends, the total shareholder return could reach closer to 100% in 3 to 4 years, which means doubling your money in 3 to 4 years. Tomorrow, when the company is about to report, I expect a bit higher growth than in the previous quarter, not much but still, but more importantly, more normalized margin again. It will be super interesting to see tomorrow. To summarize briefly, we have a purely digital clothing company that has a full control of its own brand. The company makes much higher margin than its competitors. It also has a strong cash conversion and a strong balance sheet with a net cash position. However, the recent growth trend has been varying, as well as the margin development. Hopefully, we will get some answer to these trends tomorrow. I hope this video helped to educate you more about the RevolutionRace, about the company's history and where the company stands today. If so, my goal is reached. Before you go, next week I will talk about a German company that made a massive partnership deal with my favorite football club, Manchester United, back in 2021. Well, let's not talk about how Manchester United has performed recently. Maybe it tells enough that the coach was throwing TVs in the dressing room. But anyway, after the deal, the company's margin collapsed. However, lately, the partnership fees have been adjusted and the company is making some nice money again. Stay tuned. And if you didn't already do so, please subscribe for the channel and hit the like button below. Thank you.